In this video, we're going to compare some of the most popular real estate investment trusts and determine which one might be the best for dividend investors based upon a variety of different metrics. We'll be looking at a bunch of different data and award points based upon which REIT comes in first, second, and third place. For each category, the stock in first place will receive 3 points, the stock in second place will receive 2 points, and the third place stock will receive 1 point. I'll also give a bonus point to stocks that I think deserve it based upon having an impressive feature. All of this information was gathered from each company's website as well as from other financial websites including Seeking Alpha, Google, and Yahoo Finance, and is up to date as of the making of this video. When it came down to picking which REITs to include in this video, I knew I'd have to set some guidelines. According to NAREIT, there are more than 225 REITs currently trading on US stock exchanges, and I knew taking the time to calculate metrics and compare all of them would have been too time intensive. So I decided to compare the top 8 REITs, which I picked based on 4 qualifications. First, all of these REITs are US-based, which is where I'm located and is the largest REIT market. I also did not include mortgage REITs for this comparison, only equity REITs. mREITs are so different and have their own unique metrics that it would have been impossible to fairly compare them to equity REITs. It was also my goal to only include REITs that I consider to be well diversified. Within the real estate investment trust realm, you have very sector-specific REITs like data storage REITs and even a post office REIT. But then you also have REITs that own a variety of different property types like anchored grocery stores, restaurants, offices, gyms, convenience stores, and so on. I felt like these REITs would be the best because they're so diversified in what they hold. It's my opinion that if you could only hold one REIT, then one of these would be the best type to consider. And again, each REIT sector can have its own unique metrics which can make it unfair to compare with other REIT sectors. Then finally, I also chose REITs based upon a mixture of total market cap and how popular they are based on Google searches and Seeking Alpha follows. So with that being said, the REITs we'll be comparing today are Federal Realty Trust, Triple NREIT, Agree Realty Corporation, Essential Properties Trust, Realty Income, WP Carey, Simon Property Group, and Whitestone REIT. We'll begin by looking at surface level data and eventually move on into more in-depth metrics. For starters, let's compare the size of each company based upon the number of properties that they hold. This is likely going to cause some controversy because some view having a larger portfolio as a bad thing because it can result in slower growth for the REIT, whereas a smaller REIT can potentially grow faster. However, I view larger portfolios as being better because they offer more diversification and they can have more vacancies without the elevated risk of a dividend cut. So I tend to view more properties as being safer and thus better for people who want a more dependable dividend. People with more interest in growth potential might want to consider other options, but I personally like larger, more established REITs. For this category, Realty Income comes in first with 15,485 properties. Second place goes to Triple N at 3,546, and then Agree Realty at 2,161. This, however, is a bit misleading because the following REITs on the screen own malls or large shopping centers that have a lot of tenants within each property. Federal Realty Trust reported having over 3,300 tenants, but I could not find an exact number for Simon Property or Whitestone, despite combing through a lot of SEC documents on my end. Simon could actually have the most since they own these huge malls with sometimes hundreds of tenants in each one, but since they only report the number of malls that they own, I can't guesstimate their tenant numbers. So I'll have to give the points to the aforementioned companies. Now let's look at their occupancy ratings. The following are the numbers that each company reported based upon their most recent quarter. In first, we have Essential Properties Realty Trust with 99.9% occupancy, followed by Agree Realty at 99.8%, and then Triple N at 99.4%. Whitestone REIT came in last at 93.6%, and for reference, the REIT industry average is currently around 94%, so most of these companies are doing pretty well. Now let's see which stock currently has the highest yield. Which equity REIT currently gives you the biggest bang for your investment buck in terms of dividends? The highest yield doesn't mean it's the best stock out there, but if it is higher than average, it could indicate the stock is currently undervalued. These are their current dividend yields, which change on a daily basis, so you'll want to check them when you happen to be watching this video. But right now, you can see WP Carey now offers the highest yield at 6.16%. Their stock is still experiencing a large sell-off after the company slashed its dividend following their decision to quickly get rid of all of their office properties. This move ruined an almost 25-year streak of yearly dividend increases, so this explains why their yield is so high right now. But you can see that in second place we have Realty Income at 5.92% and then Triple N at 5.35%. Next, we'll look at their 5-year dividend growth rates. In recent years, how fast have these REITs been able to grow their dividends? All of this information is coming from Seeking Alpha. In first place, we have Essential Properties Realty Trust with an impressive 11.9%, followed by Agree Realty at 6.16%, and then Realty Income at 3.55%. Essential Properties Realty Trust is the newest company on this list, which explains the impressive dividend growth. WPC again suffered after dumping all of their office properties, and both WSR and SPG suffered significantly during the pandemic. I'm also going to take this time to give an extra bonus point to every REIT that pays monthly dividends. Although the quality of the company is far more important than whether they pay investors monthly or quarterly, it's still a very nice feature that a lot of investors look for. 3 of these companies, Agree Realty, Whitestone, and Realty Income, all pay monthly, so I'm going to give all of them an extra bonus point in this category. Now let's look at their current dividend payout ratios. The lower the number in this category, the better, and the payout ratio is how much the company is paying out of their earnings to shareholders. For REITs, they all have very high payout ratios because they're legally required to, but again, the lower the number, the better. In first place, we have Whitestone REIT at 54.4%, followed by Simon Property at 60%, and then Federal Realty at 66.1%. Again, both Whitestone and Simon went through dividend cuts in the last few years, so it makes sense for them to be lower. Federal Realty is the best when looking at specifically dividend aristocrats, though. Moving on, let's now look at each REIT's 5-year FFO growth. For this category, we'll see how much each company has grown in its funds from operation from 5 years ago. For reference, FFO is the more reliable metric to look at for a REIT than revenue or net income. Funds from operation is net income plus depreciation minus gains on net sales. So this is a much more reliable metric than just net income because REITs don't sell products and real estate has its own special considerations. Growth in FFO usually represents more property acquisitions or they've been really successful at raising rent on their current properties. In first place, we have Realty Income with a 5-year growth rate of 154.85%, followed closely by Essential Properties Realty Trust at almost 151%, and then Agree Realty at 133%. The 2 worst performers probably aren't a surprise at this point. What I thought was interesting is that Triple N came out near the bottom of this ranking, but they've been in the top half when it comes to dividend increases. So they've apparently been doing pretty well at managing the properties they already have. Speaking of which, I also want to take the time to give an extra bonus point to companies that have perfect dividend track records. The following companies have never gone through a dividend cut in their histories, which indicates a solid management team. Federal Realty Trust, Triple N, Essential Properties, and Realty Income all have perfect records since being launched on major exchanges. And that's going to wrap up all the categories for this video. Let's now get to the final rankings for all these REITs. In last place, we have a 2-way tie between Simon Property Group and Federal Realty Trust. Simon has suffered significantly in recent years, whereas Federal Realty hasn't been bad, they've just been a very sluggish REIT for many years now. In 6th place, we have WP Carey, which again willfully decided to go through some hardships on their end. I do think the move to dump their office properties will benefit them in the long run, it's just going to take them a very long time for them to build themselves up again. Coming in 5th, we have Whitestone REIT, another struggling company. After their COVID troubles and dividend cut, they are in a better position, but I'm still concerned about their small size and their low occupancy rating. In terms of attractiveness, I don't think they deserve as high of a spot on this list. In 4th place is Triple N. They have been a consistent grower and it's a safe company, but no monthly dividends, and it's not a terribly fast grower either. Now in 3rd place we have Agree Realty, which is a great company. They pay monthly dividends and they have a little better growth than other options, but they have a dividend cut on their track record. Now in 2nd place, we have Essential Properties, but this company has only been around for about 5 years now. They don't have the track record of every other REIT on this list, so it's going to be expected that they would have already experienced some decent growth. Only time will tell if they can perform this well over the course of several decades. Plus, they're the 2nd lowest yielding REIT on this list. Then finally, we have Realty Income in the top spot, just barely though. It was ultimately a close competition, but what sealed the deal was its monthly dividends, large portfolio, and better than average FFO and dividend growth. They're not the best in terms of occupancy or growth, but as you probably expected me to say, they've been a really solid REIT. I think it really depends if you want more consistency and safety or potentially better growth. Monthly versus quarterly dividends are another big consideration for you. But with that being said, that's going to conclude today's video. Let me know your thoughts in the comments and what your favorite REIT is. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.